Okay, I give up. I give up on the spring real estate market. We have been talking about how things are going to change. They're going to pick up. We're going to see more buyer demand. All of these things. There was so much hope for the spring real estate market. And now that it's April 23rd, we're basically not in spring as far as Phoenix is concerned, and haven't seen much change. Actually, last week, we saw a lot of change in the wrong direction. So let's talk about what's going on. Mortgage rates. So I don't know if you heard about this last week. Mortgage rates are now at the highest level of the year, and they're saying they could still climb. So right now, the 30-year fixed mortgage rate sits around 7.5%, the highest level since mid-November of last year. That's according to Mortgage News Daily. This article goes through a good little history of what's happened over the last 6 months or so. Rates hit their highest level in a few decades last October, causing home sales to grind to a halt. Builders stepped in and they were buying down rates for their customers, so they were doing better than existing home sellers. And then rates fell through mid-January to the mid 6% range and held there through February. So there was a lot of hope during that time that rates were going to continue to go down, and the market was going to pick up a little bit and there would just be more activity overall. By mid-February, a pickup in inflation reset expectations, putting mortgage rates back on an upward trend. And more recent data and comments from the Fed basically has continued that. So we were pretty hopeful when we were seeing those dips in February that this was the beginning of a recovery year, essentially, for real estate, and that the rates were going to continue to go down and we would make things a little bit more affordable for a lot of home buyers by seeing lower rates. And so there was a lot of hope that that was going to be the case, and it seems that we are kind of reversing course. So this headline, Jay Powell just made buying a home this spring even more challenging. So last week, Jerome Powell made some comments saying that inflation was taking longer to come down to the Fed's intended target, a sign that that any rate cuts investors were betting on may not arrive soon this year, if at all. So investors were anticipating around 6 rate cuts this year. We've yet to see any from the Fed. Originally, the anticipation was for March, then it moved to June, and now we're starting to say, well, maybe there won't be any rate cuts. And I've even read some articles that say there could be rate hikes. So totally different, it's playing out totally different than what we anticipated at the beginning of the year. This goes on to say not only do higher rates make it more expensive for buyers to borrow to purchase a home, but they also continue to convince homeowners to delay selling theirs, keeping a lid on inventory growth and spurring price increases. So we've talked about this many, many times on my channel, but there is really not a big incentive for sellers to sell their home when they have these low mortgage rates. Even if they didn't buy in the last few years when rates were so low, they likely refinance to get their rate to that level. And unless you have a good reason to move, it's just really not enticing to have such a high payment compared to what you currently have. This says, I had thought in January that 2024 would be a year of less disappointment. Now with mortgage rates remaining elevated, it may be a path of moving sideways. President and CEO of real estate appraisal and consulting firm made that comment. Home buyers came into this year with hope. Going into March, the markets were betting the Fed would cut the benchmark rate 6 times this year, even though the central bank only forecasts 3. So, as I said, it's just kind of a little bit of a twist. And what Jerome Powell is saying is, given the strength of the labor market and the progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and evolving outlook guide us. So we're not in a place where we are anticipating rate cuts any longer. When he made that comment, that sent the 10-year Treasury yield, which mortgage rates follow, above 4.5%. And so that is what mortgage rates, how they were affected. after those comments last week. So the point of this article being that with rates going up, it's made it even harder for home buyers to purchase a home. And it goes on to share the difference here. A homeowner with a rate secured in 2020 or 2021 would pay $804 more per month on a mortgage payment to simply buy the same house now. So that's really the difference. To buy a more expensive house, the homeowner would need to shell out $1,773 more per month on average. Historically, an upgrade only costs $400 more a month. So in comparison, to buy the same house from 3 or 4 years ago, you're still spending $800 more a month on average, of course. And to upgrade, you're spending $1,773 more a month. And previously, you would only spend $400 more a month to upgrade your home when you're looking at the cost of a mortgage. So these rates are definitely hitting hard on home buyers. The interesting thing, however, cost of buying a home hits new record as mortgage rates jump, prices rise 5%. We're still seeing price increases across the country. And I'm going to get into what's going on in Phoenix. We're going to look at those prices specifically. But this Redfin article calls out the median U.S. home sale price increased 5% from a year earlier during the 4 weeks ending April 14th, bringing it to $380,250. That's just $3,095 shy of June's 2022 all-time high. The combination of high mortgage rates and prices have brought home buyers' median monthly housing payment to a record of $2,775, up 11% year over year. So prices are an issue as well. And I know I get many comments saying it's not rates, it's price, but really it's the combination of both right now. Something's got to give. Let's see what's going on in Phoenix. I figured let's take a look at the median sale price here because we haven't checked this out in a while together. And it is following that same path that the Redfin article was talking about. It's increasing. The monthly median sales price here is sitting at $445,000. The pink line is 2023. This is measured on a monthly basis, this graph here. So we're going to see a little bit more like volatility in this, but it went up last year, went down a little bit, back up, down, and now we're heading back up again. So if we look at the median sales price on an annual basis, which is going to be a little bit of a smoother line for us, we can see where we're at 435,000 as the median measured annually. And last year we came down a little bit, held steady, started to go back up, and we've only been increasing since the start of the year. Of course, 2022, we're looking at this just continuing to increase. But if you look back at the monthly median, this is where everything changed. This is where rates started to go up and our monthly median sales price started to go down. So there's definitely a benefit in looking at both monthly and annual, but you can kind of see the trends here. So as the Redfin article is saying, yes, prices in Phoenix are still going up too, despite where rates are and how rates have been climbing. In fact, we've actually had we're nearly hitting an all-time high when you look at the monthly average sales price per square foot, again, measured in a little bit of a different way. But the Cromford report is saying the average price per square foot for all areas and types of homes has breached the 300 level again. We're here in this blue line here. And that almost hits the record. The record stands at $306.39 per square foot. That was set on June 10th, 2022. So going back to June of 2022, that was around here where we hit these peaks here. And you can see where we're at today. With the blue line, we are climbing and getting closer to this all-time high. Then, of course, this was followed by a 14% correction down to a low of $263.83 on January of 2023. So you can see that was around here. And then since January, prices have continued to move higher. We've just kind of seen this gradual increase. A year ago, we were around 280-ish. $280 per square foot. And now today we're sitting at $300 per square foot, showing when we look at this, prices have risen about 7.3% over the last 12 months. And at this point, they only need to increase another 2% for us to establish a new all-time high. So what is suffering here? Because it seems like we still have people applying for mortgages, people buying homes despite the high prices and rates. Well, really what we're seeing is the number of transactions and sales volume. That is the most affected as of right now in the market, and really has been over the last year or so. And by the way, if any of this is of value to you, make sure to hit that like button and share it with someone who would be interested as well. So sales per month, here's where we're at in the Phoenix area. I'm going to take these off just so we can see. Last year was not a great year for number of transactions in Phoenix. This year, we've kind of trended in the same direction, but still even lower than where we started out at this point in time last year. If we look historically, this teal line here remains below all of these other years. So sales volume is really taking a hit. We're going all the way back to 2014 was kind of on a similar path. 2013, still more sales, 12, 11, getting all the way back to 2010, we're still seeing the lowest number of transactions. And I think even beyond that, I believe last year, if I recall correctly, the number of transactions was the lowest it had been since like 1995, something like that. Don't quote me, but I believe that's right. Just pulling that out of my memory. So sales per month is what's really taking a hit with the transition in the market, because it is expensive for buyers, but there are a lot of buyers out there that are still able to afford a home and are doing it, because the question is, if not now, when? And so they're kind of getting off the fence and deciding to buy. And then the luxury market hasn't really been affected at all. In fact, the luxury market has increased in price over the last few years. So it's really the sales per month that has tanked and crashed, if you will, at this point in time. So let's look at the Cromford Market Index. We look at this every week, and we're at 111.4. As you all know, any number between 90 to 110 is considered a balanced market. And so we are very close to being in balance. I would pretty much just consider us in balance, in fact. And this is throughout the valley as a whole. So every city is going to behave a little bit differently, and we're going to look at that. But our demand is about 21% below normal, supply being about 29% below normal. Both of these really not making too much move. It's been just a little bit stagnant the last few weeks as we've looked at these numbers. Now, by city, you can see that Chandler is leading the pack. That's no surprise. It's been the case for quite a while now. 218 is their CMI, so anything over 110 is a seller's market. They're well into a seller's market. Gilbert is also pretty strong. The average change in the CMI month over month was 1.1%. That's up from 0.3% last week. And I know that those numbers are very small, but it does show that we, maybe gained a little bit of strength in terms of moving towards a seller's market. Tiny bit, but that's the direction we went. They're saying there are 9 cities that have seen an increase in their CMI over the last month, and 8 cities have declined. You can see some of the biggest changes month over month. We have Tempe moved in the direction favorable for sellers. We also have Paradise Valley. As I said, luxury is doing very well. There's a lot of luxury in that city. And then we've got Queen Creek that moved in a direction favorable for buyers, deteriorated a bit for sellers by 11%. We also have Fountain Hills was another one that had a pretty big change. Glendale, Cave Creek. All in all, there are 10 out of 17 cities that are in a seller's market, and that's anything at Peoria and above. And then there are 2 that are balanced, which is going to be your Paradise Valley and Surprise. And then everything from Cave Creek to Buckeye is considered a buyer's market right now. Now, like I said, there are plenty of people out there that are still buying homes because we all have to live somewhere. And if you can't afford to buy a home and it makes sense for you right now, it's not the worst time to buy. So if you are one of those people that's considering that, but you're hesitant because of where rates are heading, I do have some great recommendations for mortgage lenders that might be able to help you navigate that information. So check the description below for a link to get that information. And sellers, of course, if you're just curious about your home value because we've seen price increases over the last year, check the description. I have a link where you can check that out as well. I'll see you guys next week on the next market update.